Hello, it's Will. I thought I would go through some sector rotation. That seems to be what's going on right now. If you've been watching YouTube channels, you might see other people have talked about sector rotation, and it was kind of obvious to a lot of people. And one of the reasons could be that these stocks are been beaten up quite a bit, like things like airlines, cruise ships, restaurants, hotels, even banks, stuff like that. So home building. So basically, I thought I would show you some stuff and how you can get into that, whether you buy stocks or ETFs. So there's a lot of sector type ETFs that you can get into if you don't want to buy the individual stocks, but then you can look at the stocks in the sectors as well. So I'm going to go through that. And a great tool that I've talked about is TC2000. And I'm going to show you what I do with this program. And if you want to get a free trial and $25 off signing up, you can check out the link in the description below the video. I've also got a great candlestick forum where you can learn about candlestick trading from Steve Bigelow. He's like the best guy. I've got 3 of his books as well. And that's a daily forum where you see stocks that he's recommending and that other people are posting that give you good ideas. And you can ask questions in that. And then there's a course on trading using various the whole aspects to trading, including management of the trade, stop losses, and getting in and out exactly when and stuff like that. So I have various watch lists. On the left hand side here, there's these tabs, which is really nice. So you can set up multiple lists of stocks and just tab between them in one little block here. And then I've got another section. So this has sector ETF. So if you're looking at an ETF, let's just say you're looking at NASDAQ, right? And you don't want to keep, typing it in and stuff. So what you can do, there's this little add to personal watch list. There's a little icon here. And then you can put it into a watch list. So you can make a new one, or you can add it to an existing one. So I've got this one called sector ETFs. Down here is also markets and currency. So these are kind of the main markets. So Russell 2000, Dow, SPY, S&P 500. I got the Canadian dollar because I'm in Canada, Toronto Stock Exchange, and then the NASDAQ. So I like to see what the overall market is doing. And then these are sectors. So we'll talk about how we can look at those. But let's say you don't know what ETFs or sectors are doing well. You can go to this. There's a drill down tab on TC2000, which is absolutely incredible. And it'll show you the daily percent change of different sectors. But you've got 11 sectors here, and you can just click on them and look at the chart for the overall sector. So you don't have to just look at like yesterday's or today's gain. You can actually look at the chart, because there's certain things that I look for. I've talked about break of trend and sort of a good uptrend. So that'll give you a high level idea of what the sector is doing. So as you can see here, I mentioned this earlier, energy, industrials, basic materials, financial, real estate. These are kind of the sectors that, they've recovered a lot, but they're beaten up still pretty badly. So there's still opportunities if you haven't gotten into the market for, because tech has been up quite a bit. So, so one thing I'll do is I'll look at the chart and sort of see, if I'd want to get into this or not. And I do that with, in a variety of methods that I've talked about. And, like I said, you can check out the courses that I've listed in the description. But one thing you can do is look at the local aspect. There's different ways to do this, but if you draw, I kind of look to see if there's like a down trend at the top of the candles in the short term. So you can do one like right here. You could do a bit of a longer one that say went back like this. And so you can see how you broke through, it came back down, and now you're breaking through again. So there's like different spots that you could potentially enter in. They don't always go up like right after, complete reversal. So what happens is, like, say I draw a line, you can see it's down and you had a break here, but with these red volatility stops, that means that, it's still not a great time because of the volatility and the big drop that we had. So I kind of wait for these green dots where the price is above them, and that would be like potentially where you put a stop loss. I use other things like the T line, which is the 8 EMA. I want to make sure it's up above that. But so like say you break right here, you might hit this resistance line. So what I'll do is draw a horizontal line. And you can hit the shift bar and make it straight, like horizontal. And what I'll do is I'll put a line at the top of the candle here, and you'd want to see that it broke. So you can see that it broke, but it didn't really sustain that. There's also resistance back here, so you never know exactly how high things are going to get. You can see how there's a resistance there as well. So sometimes you'll have these resistances where the stock came up and came back down, and there's a potential for it to bounce off that, but you don't know exactly. So if you're aware of that line, you could say let's wait to see if it breaks above that as well. So you can look at the sectors. So like there's different things, like I mentioned, the break of a downtrend is a good point, like here. So I put an arrow like this as a potential entry point. And then you can see that the 200 MA is pretty close, and a lot of times it bounces and it kind of squeezes into here a lot of times. It can't get quite through that. So a good entry point is right when it's crossed over the 200 MA. So it's a little bit off of that right now, but you can see that we're in a good uptrend. And then we have basic materials. It's in a nice uptrend. Now what you want to do is look at where you should have got in, and that would have been back earlier. So if I draw this trend, I break through, I wait for kind of a nice up candle and these green volatility stops. If you don't feel comfortable with these gaps here, you could wait. You see this point where it's kind of not breaking through, so you can draw a horizontal line like that as you're seeing it not really get through that. And then once you have a break, you can get in there. So you want to always look back, but then there's always these pullback opportunities. So when you see this, if you see a peak and then a reversal, so you can draw like a line like that and wait for it to kind of break through that trend, and that's an entry point there. And right here is where the price is on the T line, which is the 8 EMA. You can also draw like a straight uptrend line instead of using the 8 EMA, which is a bit up and down, like a wobbly line here. And when you see a support, like an up candle at the trend line. So if I drew this trend line, extended it, see a pullback, and then when it's getting close to that and you start to see it going up, that would be an entry point. So you can see a pullback here. And so there are many opportunities to get in at a better point. Like if you're going to buy here up at this point, it's a bit high up off the trend. So you don't necessarily have to buy there. You can wait. Financials have been beaten up pretty good. Of course, if you go back to March, they've still up a lot, but they spiked, bounced off to 200, came back down. You see all these red dots? It's a great sign to kind of avoid buying during that phase. So if I draw like a line like that, which is the downtrend, once we broke through. So this is the sector analysis. And once you decide that, certain sectors you're interested in, you can either look at ETFs or you can look at stocks. So I'll just quickly look at some stocks here. And these are in the oil industry that there's also industry indexes within the within that category. You can also look at these 4 opportunities as well, where that sector, like you can see oil and gas equipment is looking pretty good. Now, like I said, you always want to go back. It gives you that confidence to say in the future, I want to make sure there's a break of this trend line here and then get in there. And then when you click on that oil and gas equipment, you're going to see stocks that are just in that in that industry. And so, I can click on any of these stocks. Now it depends on the price. Like, if you don't want stocks that are below $1 or $5, you can avoid those as well. But that looks pretty good. It's already established a bit. Like, you can see how it's gone up. But if you look at like exploration, it's just broken through the 50. This is a relatively early entry point because you had this downtrend. Well, you had quite a bit of a downtrend here, and then we broke above the 50. So this is an earlier sort of opportunity, in my opinion. So this is a great way to look at the smaller sectors. Like, this is also a really great opportunity in the sense that you're just breaking over the 50. You haven't had a massive amount of gains happening at this point. So if we go back to my main chart, if you're looking at a stock, like we were looking at MBR, let's say, if you don't want to buy that stock, you want to find out maybe a ETF. If you click on watch list here, and then it says here MBR member of, and then you get this list of all the ETFs that it's in. So this is an amazing feature of TC2000. After a while, you're going to know a bunch of them because you add them into like a sector ETF watch list or something like that. But obviously they're in like small cap types of funds, but there's one called DIG, which is ultra oil and gas. So it's a leverage fund. It's not just one-to-one, but so that's if you're into a little bit more risk. You can find ETFs that just have oil type stocks, and there's more generic ones as well. So I'm just gonna open this up a bit. So we have different ones that can handle the oil and gas. So I'll show you some ETFs that I have that are various sectors. So Jets is one that is that has all the different airlines in it. And another interesting thing I mentioned before was in TC2000, there's a component watch list, so you can see all the stocks. So if you decide you want to buy stocks, you can look at the individual stocks. So you can see American Airlines, United, Delta, JetBlue, Alaskan, Southwest, etc. So Jets is one, and like I put this line down here, and so there's a good entry point. And of course, you got the 50 MA, so you're not sure if it's going to bounce like it did a couple days and then it finally breaks through. So, it's up to you if you decide to wait until it breaks through the 50. It also, sometimes when it breaks through the 50, it also comes back and tests the 50. So people that are very conservative, they don't necessarily buy close to the 50. They don't necessarily buy when it breaks through the 50, but they wait for it to come back and then start to go up again after it bounces off the 50. So that's up to your personal decision. So gaming is hotels like Las Vegas Sands, Wynn, MGM, and those are obviously potentially geared to come back. And so same sort of concept. You have this downtrend here. You kind of broke it, but the 50 is really close. So I probably wouldn't have bought right there because you can see how it takes time. And then the 200 is very close too. But so it depends on your approach, but you've got that opportunity, and then you have this opportunity to get in once it breaks the 50, or even to wait until it comes back and hits off the 200. You can see here we broke through the 200 and then it came right back down. So it doesn't necessarily mean it's going to go. And then you can see, like I said, I know people don't believe in technical analysis, but if you draw a horizontal line, it depends where you draw it, at the top of the candle or the top of the wick. But you can see here, this is today, as of this morning, it came right up and bounced and down, it came back down again. So I'm not saying that, it's not going to break through and keep going. You don't know what's really going to happen, but that is a point. If you were buying down here and it started to get up to there, you might want to sell, see what happens once it breaks through this resistance here. before getting back in again. So we have energy, or this is, America, this is in the US, XLE. It broke through the 50 today, so that's a great entry point. I'm not recommending, obviously, anybody buy or sell stocks, but sort of telling you about my approach. So you can see here, because the 50 was right here, it bounced off the 50 and it hasn't really, it's been pretty flat, but now we're seeing some movement. There's also some indicators down here that I use just for verification. This is kind of like MACD. So I like to see the cross where there's an uptrend of the MACD. This is derivative oscillator. You can see it's uptrending green. And this is the stochastics. And so you don't have to buy necessarily at low stochastics, but you're looking for buy and sell signals ideally at reversal points when you have an oversold condition down here, or getting out when you have an overbought condition. So right here, we're at 100, like the stochastics, big gap up. So when you have big gap ups with high stochastics, which is called overbought, it's a chance that you should get out, or at least move your stop losses up quite a bit. So other sectors, industrial, I'm just going to go quickly through some. ITA, aerospace and defense. XLF is financial. You can see that's coming up nice. ITB is home construction. So we've had a good uptrend here. Emerging markets, if you're into that. I'm not saying any of these are buys right now, but I'm just showing you various ETFs that you could take a look at. XLU is utilities, which has been coming back. Esports, that's all the video games and stuff. And some of these have been pretty high for a while, so you have to be careful that they might not keep going up like that. ARC is another one that's a tech kind of innovation. It's been going gangbusters since March 23rd at the crash, you can see. No guarantee it's going to keep doing that, but iBuy is like if you're looking at the online sort of aspects. There's cloud-based ones, like obviously they're getting hit right now because there's a rotation, as I mentioned, from tech into value stocks, or ones that got beat up by the pandemic. Online, these ones are, and then you have gold's been doing really, really well, but there's a bit of a sell-off on that as maybe people feel more comfortable with the markets. The fear is going down. But there is a lot of money printing and debt, so the gold could be going up again. But gold mining, if you're interested in, so you have the gold, there's gold, like the bullion itself, and then you have mining stocks. So mining stocks will be they'll be more volatile, but they make a lot of money when gold's going up. So right now there's a bit of a downturn here, so I wouldn't be buying it right now, but silver is another one getting hit. It's been in quite a high uptrend. So those are some sector ETFs. And like I said, if you find any stock, you can always find sectors. You can also look at websites like iShares and just look at their ETFs and see what they have for various sectors. But it's kind of good to have a sense. I like sector analysis or sector purchasing because certain sectors will do well at different times, but you can obviously just buy the whole index. QQQ is the NASDAQ, S&P 500 is SPY, and there's other ones, but those are spiders. Russell 2000 is iShares, IWM, and Dow Jones, DIA. So there's other ones, but these are the overall index as a whole. And then finally, I'll just mention there's leveraged funds, which are 3x, 2x or 3x. I have a watch list for that. And contrary to popular opinion, you can actually hold these for more than a day. You're still going to make a lot of money if you know what you're doing and you buy them correctly. But a lot of them are from Direction, this company called Direction. But you can see transportation is obviously doing well. Silver yesterday, this is not from today, but silver was on a tear. These are 3x. DPST is a regional bank's 3x. They're starting to take off. Hibble is a high beta S&P. which means it's going to go up or down a lot more than the market. Even with 3X, it's defense has been moving, which is Boeing and that type of thing, Lockheed Martin. So you can see 50 MA was keeping it down for quite a while, for month and a half or so after a downtrend here. Pretty flat, and then it's finally broken through, so we have a potential there. Energy is moving, like I mentioned, so if you wanted to get into 3X, this is micro sectors, it's not direction. Gold's going down, so there's inverse ETFs too. So when something starts to reverse and go up, you can buy the opposite, which is the inverse. There's bear ETFs or inverse ETFs. So that's like Dust and J Dust. Those are gold. Nail is a home builder one that's just about to break the 200, but it's been in a pretty good uptrend here. Retail, if you're interested in that, that's a 3Xer as well. But small caps, the Russell 2000, FAST is a financial bull, which is moving well now. It's fairly early in the game if you wanted to look at that industry. And then you have these national you have these ones for India and Russia for the country as a whole. Utilities, there's real estate. So I hope you guys like that. We'll talk to you later.